Welcome back. You tune into Market Fatafat, and before we get to all the top buzzers, let's talk about the nifty reject that's on the anvil. The reject is set to take place in September this year. What are the likely inclusions and exclusions? Well, to give you the lowdown for that, my colleague Varun is now joining us. Varun, take it away.
Well, so the Nifty semi-annual review will happen in the month of September, the cutoff date for which is the end of July, and the announcement is expected to come in the later half of August. Now, Nuvama has come out with a report wherein they are highlighting the probable changes that could happen to Nifty 50. So, there are two stocks which could enter the Nifty 50 index, that is Interglobation and Max Healthcare. And if Max Healthcare is included, it could actually imply passive buying of around $400 million into Max Health. But they say that the only scenario where Max Healthcare may miss the inclusion is that if HAL, that is Hindustan Aeronautics, outperforms Max Health by around 12% immediately, an outcome for which they say actually has a very low probability. Also, they say that the two stocks that could actually be excluded from Nifty 50 in the semi-annual reject are actually Hero MotoCorp and IndusInd Bank. They have also made their comments on BSE Limited, because earlier it was understood that BSE Limited could also enter Nifty 50. So, Nuvama says that as per their calculation, there is zero probability that BSE Limited would enter Nifty 50 at least in the September semi-annual reject. So, there are no chances that BSE Limited would enter the Nifty 50 in the September review. Interglobation and Max Health has the highest probability of entering Nifty 50, and Hero MotoCorp and IndusInd Bank will actually be included from Nifty 50 in the semi-annual reject.
Okay, Varun, thanks for taking us through the potential candidates that could make it to the index later this year. But now let's move on to an ET Now impact story. A day after Sheela Foam released a redacted disclosure of their CEO's resignation, ET Now highlighted the matter to alert investors against governance lapses. And today, the company has released the full disclosure. Sharad is joining us with those details. Sharad.
Well, yes, this is the ET Now impact, and the stock is Sheela Foam. Earlier in the day, we had actually mentioned about the incompleteness of the disclosure given by the company. It's not about the content, but the openness or the quality of the content which was given out by the company earlier. Now, of course, Sheela Foam has released their full disclosure again, and interestingly, the action has been taken after the issues have been raised by our channel. Now, the outgoing CEO resignation, the earlier letter had come and they had two blackened paragraphs, and that had created confusion amongst the investor community as well. We did raise the question, and then also the company answered and they gave a full disclosure. Now, the channel does strive for proper standard disclosure as per the regulatory requirements, and we also hold higher standards of journalism when it comes to financial reporting.
All right, moving on, and let's get started with all the buzzes in trade. And on the technicals now, we're joined by Sneha Seth, who's a derivative analyst, Angel One. Joining us on the technicals, and from our research team, we're joined back by Rabinder. Hi Sneha, thank you so much for joining us. Welcome on board. The first stock is BSE. Now, BSE is a stock, which has given some stellar returns in the last 6 months. So, if more than 56% return, for BSE. Do you see more steam left in this counter? Do you see it touching those 3,000 levels? So it's 52-week high. How do you see this stock shaping up on the charts?
If you look at the chart structure, it is very strong. If you look at the month-on-month wise chart structure, I would say this is the 5th month wherein we are seeing a positive move in this counter. Counter has been taking support in the 20 DEMA. It has been consolidating in the last couple of sessions, but it has been taking a support around the support zone of 2007.30, 720. So I believe, looking at the overall chart structure and the recent volumes, any move above 2,800 would be very interesting. 2,800, 820. We may see a sharp move coming towards 3,000, and plus levels are even possible. So someone who wants to take a short-term trade can go ahead with a strict stop loss around 2,720 for the target of 3,000.
Levels to watch out for on BSE. Let's shift focus and talk about an entire basket of stocks from the financial pack that are in focus on the back of a Macquarie note coming in. Wherein Macquarie, in their note on financials, banks and NBFCs, they've said that they prefer large private banks and they're selective on risk reward for NBFCs. The top picks from this sector are HDFC Bank, Axis Bank, AB Capital, PFC and Shriram Finance. But amid this note, what's important to note is the rating changes that they have made. Kotak Bank, the number one stock that's in in focus today has been downgraded from outperform to neutral with the target raised from 2200 to 2300 now. SBI card has been moved from outperform to neutral with the target increased by 40 rupees. PB Fintech has been upgraded from underperform to neutral. Target also hiked. They've raised the target from 1530 to 1945 now. HDFC Life has been downgraded on the flip side from neutral to underperform, but target has been increased to 720 from 570. And IndusInd Bank has been downgraded from outperform to underperform with the target cut in almost half from 1210 to 650. So IndusInd Bank and Kotak Mahindra Bank are some of the big downgrades that we're seeing coming in from Macquarie on the back of this note, as well as the entire financial pack is in focus on the back of this note from Macquarie today.
All right, the entire banking pack is in focus on the back of that Macquarie note, but let's come to the pharma packs. Now you picked up Dr. Reddy's lab for us. This is also up and away, almost 1.4% in trade today. This counter has picked up a bit of steam in in the last 1 month, a little bit of up move coming in because this has been correcting largely. What do you see from here on for Dr. Reddy's?
If we look at the chart structure, we have seen some profit taking. But if we look at the overall setup, I believe there is one support zone placed around 1260, 1270 zone. And the counter has been taking support near those levels. On the higher side, I believe any move, any sustainable move above 3000, 3010 would be very interesting to watch out. Once we see an up move above this levels, I expect this counter to head towards at least 1360, 1370 level is possible. And once we see a move above this, I think the counter looks very much, likely to hit a fresh record high even. So overall setup is quite good. Someone who wants to take a fresh bet can go ahead.
All right, that's Dr. Reddy's on the charts. Then moving on to the next counter that is in focus, and that is Tata Power. That is reeling under pressure on the back of the fact that they have been ordered to pay $490 million in damages to Kleros Capital Partners. Now, the award has been issued under the Singapore International Arbitration Centre rules. Now, remember that Kleros had alleged that Tata Power has breached confidentiality, non-circumvention clauses in the non-disclosure agreements, NDAs. Now, the dispute relates to a proposed coal mining project in Russia. Kleros is seeking damages between $5.25 billion to $20 billion, and on the back of that, Tata Power is in reeling under pressure, currently trading with cuts of 1.7%.
So that's Tata Power, and the reason why that stock is in focus and under pressure today. But Sneha, coming to you, another stock from the Tata Group. You picked up Tata Steel for us. Now, if I pull up the charts for Tata Steel, last 6 months the stock is up 20%. So good move, and we've seen that sustain over the last 1 month, last 5 days as well. What are the next levels that you're spotting on the upside?
Yeah, the chart structure looks quite strong. I believe if someone wants to go ahead and long, keep a strict stop loss around 163, 162 and go long. I believe once we see an up move above 170 on the closing basis, we may see a sharp momentum coming in. There are chances that we may see some consolidation at the high levels, but yes, 170 and above levels would bring back the momentum, and I think we may see an extension of this move at least towards 180, 182 levels is very much possible, and above that also is likely to happen. So I think someone who wants to go ahead and bet in the metal space, which has been doing good recently, and especially if you look at the overall structure for Tata Steel, this counter looks very much promising for near to short-term trade.
All right, moving on to the next counter, Hindustan Zinc. Ravinder, tell us more quarterly updates coming in for this company as well. So tell us what's the update for Hindustan Zinc.
Well, as Hindustan Zinc has announced a business update, and company said that the company the highest ever first quarter mined metal production of 265 KT, which was up by 1% year-on-year basis, and in line with the mine preparation activities being carried out every year in the first quarter. It was lower quarter-on-quarter basis, and refined metal production was at 250 KT, which is down by 5% on a yearly basis and 7% on a sequential basis, in line with the plant availability and on the account of maintenance activities. They say that the Hindustan Zinc Alloys, which is a wholly owned subsidiary of the company, has delivered highest ever quarterly production of 5 5.1 KT, and the saleable silver production was at 149 metric ton, lower by 11% year-on-year basis, majority due to lower silver input from SK mine, and down 16% on a sequential basis, with in line with the lead production and higher work in progress liquidation in the base period. And wind power generation for Q1 FY26 was for 134 MU, which was up by 24% year-on-year basis. So back of the business update, Hindustan Zinc is in focus.
Okay, so that's the reason Hindustan Zinc is in focus. And let's talk about Coromandel International, a stock that held on to the green for the better part of the day, but now has very sharply slipped into the red. First, let's understand why this stock was in focus today. It's because Competition Commission of India, which is the CCI, has approved its proposal to acquire a majority stake in NACL Industries. The acquisition plan announced in March involves Coromandel purchasing a 53% stake in the agrochemical company for a deal worth 820 crore rupees. The company also intends to launch an open offer for an additional 26% stake in line with SEBI's takeover regulations. The deal is expected to majorly strengthen Coromandel International's crop protection segment. So on the back of this deal news flow on the acquisition of majority stake in NACL Industries, Coromandel International was in focus but has sharply slipped to the day's lowest point, a 1.6% cut on the stock as we speak.
All right, Sneha, coming to you then. Chambal Fertilizers is what you picked out for us. Tell us what you see on the charts for Chambal Fertilizers, because in general also the entire chemical space could see a re-rating happening. Most of the analysts believe that. On Chambal Fertilizers also, what do you see? Because even this has been, in the last 1 month, it has been correcting a bit. So tell us from here on, how do you see this moving?
If we look at the overall counter, we have seen a decent correction from 700 plus levels. This counter is trading around 560. But if we look at the overall chart structure, we see this counter taking support near the 200 simple moving average on the daily chart structure. It has been consolidating for quite some time. I believe on the higher side, 570, 572 is the resistance zone. On the lower side, I believe 535, 530 is the demand zone. So looking at the overall chart structure, I believe any move above 570 would be very interesting. And looking at today's development, I think there is a possibility of counter heading towards 570 and above levels even. So keep a close watch on this counter. Any move above 570 would be very interesting, and we may see a sharp short covering move in this counter. If someone is already holding for a medium to long-term perspective, maintain a stop loss around 530 and keep holding it. The stock looks good.
All right, moving on to the next counter then. Escort Kubota is in focus, where Escorts has commercially launched a new product called Hydra 12. It's a pick and carry crane, and this is under its construction equipment segment. Now remember, Escort Kubota had also come out with its numbers for the previous month auto sales number, and today they have launched a new product as far as their construction equipment segment is concerned. On the back of that new launch, it has given up those morning gains. It's currently trading towards the lowest point of the day, but nonetheless holding out in the green with gains of 0.1%.
Okay, so that's Escorts Kubota in today's trading session. But let's keep it going with the auto pact. And Sneha, you've picked out Ashok Leyland for us in today's trading session. Give us a sense of what you're seeing on the charts, because last 1 year the stock has not done all that much. While it has managed to give very nominal growth, it's not been as good as the other components of the auto pact. Give us a sense of where you see the stock headed on the charts.
If we look at the chart structure, this counter has been forming higher top, higher bottom kind of a structure. The counter, I believe, looking at the overall chart structure, the support now has been shifted towards 240 to 45 zone, and I believe the move what we have seen, although we are seeing some consolidation recently, but I think any dips would be it's an opportunity to go long. We have seen an up move. Any profit taking towards 240 to 45 zone would be a fresh buying opportunity for this counter. And I believe once we see an dip, there is a possibility that another next leg of the rally can be towards 265 to 70 zone. So I think the overall chart structure is good. We are seeing higher top, higher bottom formation. Would avoid to buy at current levels, but yes, in case for dip, one can think.
Okay, so avoid to buy at current levels, but that's the outlook on Ashok Leyland from Sneha. Let's move away from that and talk about Nykaa, a stock that has been in focus today and seeing deep cuts today on the back of a block deal where we understand, or multiple block deals rather, where we understand 2.3% equity or roughly 6 crore shares have changed hands in 3 block deals this morning. An early investor is expected to have offloaded part stake, and that is Mr. Harinder Pal Singh Banga, who's the founder of the Caravel Group, and he's been an early investor in Nykaa even before the IPO days. There's word on the street that he might have sold a 2 to 2.5% stake of his holding, which as of now at current levels, if you don't account for this deal, is at 5% thereabouts. Sources have also told Economic Times that the shares were offered at 4% discount to the closing price of yesterday, and the deal is estimated to have happened at $150 million, which is roughly between 1,200 and 1,300 crores in terms of Indian rupees. On the flip side, FIIs are expected to be the buyers, but we'll have finer details of these, the buyers and the sellers, and the price at which the shares have been traded today post market hours in the evening. So we'll have more clarity then, but till then, Nykaa in focus, almost a 4% cut is what we've seen on the stock all day today.
All right, Nykaa in focus on the back of the big block deal. But coming to you, Rabinder, then you've picked out CSB Bank for us. Operational updates coming in. Tell us how do the updates look like for this bank?
Well, as CSB Bank is in focus, the company has announced their Q1 FY26 quarterly business update, and company says that the total deposit saw an uptick of 20% at rupees 35,990 crore as compared to 29,920 crore, and CASA deposit was also up 14% to rupees 8,465 crore as compared to 7,449 crore on a yearly basis, and term deposit was saw an uptick of more than 21% to rupees 27,525 crore as compared to earlier price of 22,471 crore. And if we talk about gross advances, then gross advances also saw a good uptick of 32% to rupees 33,142 crore as compared to 25,099 crore. And advances against gold and gold jewelry was up by 36% to rupees 14,928 crore. So back of the good business update, CSB Bank is in focus.
CSB Bank holding on to a tinge of green today, but let's move on and talk about another stock that's in pressure. Along with Nykaa, you have DMart also that's tanking away in today's trading session. This on the back of its Q1 business updates that the company reported, which was slightly under the street estimates. Standalone revenue from operations for the quarter ended June 30 has come in at 15,932 crores, which is an uptick of 16.2% on a year-on-year basis. However, this is still 4% lower than the Bloomberg consensus estimate at 16,575 crore rupees on the revenue front. The total number of stores as of June 30th stood at 424, and according to Motilal Oswal, the productivity remains weak as annualized revenue per store grew just 2% on a year-on-year basis compared to the 3% growth that we had seen in the previous quarter. If you take a look at what brokerages are maintaining in terms of their view when it comes to the stock, Macquarie has maintained an underperform rating. The target is unchanged at 3,000 rupees per share, and Morgan Stanley has maintained its underweight rating with a target still at 3,260 rupees per share. So that's the take on Avenue Supermarts. Slightly weak update coming in. It's seen a sharp recovery post the midday mark today, but nonetheless, it's still 1% in the red as we speak.
Right, that's DMart trading with cuts on the back of that news flow. But let me come to you then, Sneha. You've picked out one again from the consumption basket. This is Dabur that you've picked out for us. Tell us, what do you see in the charts? This one is also not done much. In fact, it has been in a corrective phase for the last 6 months. So what do you see on the charts for this?
See, here the chart structure is quite interesting. We have seen a recent profit taking, but if we look at the overall chart structure, this counter has been taking support since like last couple of years, I would say, around 490, 500 zone, and finally the counter has rebounded to those levels, and that should be acting as a resistance. But in case we see an up move above 500, 495 levels, it would be a very strong move coming in. So I believe someone who wants to go ahead and take a long position, just wait for some time, keep a close watch on this counter. In case of any strong move coming above 500, this counter would be a good buy. In fact, we may expect a strong move at least towards 550, 560 levels. is the levels which I'm looking forward. Keeping a stop loss of around, say, one can keep a strict stop loss around 460, 65 in that.
Those are the key levels to watch out for on Dabur India. But let's keep it going with the consumption pack and now talk about Nestle. This stock is in focus because Nestle has announced a new Maggi noodles production line at its Sanand facility in Gujarat. This has been developed with an investment of over 105 crore rupees, and the new line will increase capacity by approximately 20,300 tons per annum in FY26. The expansion is a part of Nestle India's broader capital expenditure plan, which includes both greenfield and brownfield projects from 2020 all the way up to this year. The Sanand plant is currently has a total annual capacity of around 1,700,000 tons and is operating at 77% utilization. So that's the take on Nestle India. Positive news, the stock is reflecting that, although just mildly in the green is where the stock is trading right now.
All right, with that, we are completely timed out on this edition. So, Rabinder and Sneha, thank you so much for taking the time out and joining us today for Fatafat. But let's talk about Reliance Industries' plans to consolidate its FMCG brands into a new entity, New Reliance Consumer Products Limited. This strategic move aims to provide specialized attention to FMCG business. My colleague Anjali Palod is here with more details of that story. Over to you, Anjali.
Well, Reliance has proposed to restructure its FMCG business and even carve out a new subsidiary which will be under Reliance Industries Limited for the FMCG arm. Now, currently all the FMCG and consumer brands business for Reliance is housed under two major subsidiaries. One is the Reliance Retail Limited, RRL, which houses some consumer brands, and the larger FMCG business, which is RCPL, which is under Reliance Retail Ventures Limited. Now, in this restructuring, for which Reliance had submitted a proposal to the NCLT and it has now been cleared by the NCLT, there are 4 Reliance Group companies that are involved. So a step-by-step progression of how things will unfold is that first the RRL will transfer its consumer brands to RRVL and then and this will be done in a slump sale. After which RCPL, Reliance Consumer Products Limited, which is under RRVL, will amalgamate these into RRVL. Now, after which RRVL will have all of the consumer businesses and FMCG businesses, and a new subsidiary will be carved out from RRVL, which will be called New RCPL, which was formerly known as Tira Beauty. Now, the rationale that the company has given for this restructuring is that the FMCG business needs specialized management which is different from its core retail operations, and also that because of the large capital requirements, the FMCG business may be able to attract a different set of investors. And finally, the company has said that consumer brands business is not a part of retail business, and therefore it should be a part of Reliance Industries Limited directly. Therefore, this new subsidiary, which is New RCPL, will be the one that will house all consumer brands and FMCG businesses, including Campa, Independence, the recently acquired brand called SIL, as well as all the other recent acquisitions that RCPL has done. All of these new consumer brands will now be under New RCPL, a direct subsidiary of Reliance Industries Limited.
Okay, Anjali, thanks so much for bringing us all of those details. Let's move on from that. And in a judicial development with far-reaching implications for the real estate sector, the Supreme Court has allowed substitution of a property attached under the Prevention of Money Laundering Act. The case in focus involved real estate major M3M India, which had filed a special leave petition seeking to swap the attached land with commercial assets of equal or higher value. The court agreed, but only after a detailed affidavit by the Enforcement Directorate confirmed that the alternate properties located in Gurugram's M3M Broadway were unencumbered, fairly valued and compliant with all legal safeguards. A bench of Justices P.S. Narasimha and R. Mahadevan ruled that while the substitution was being permitted in this case, this should not be treated as a precedent.
And what makes this significant is not just the relief for one company, but the broader legal recognition that enforcement action should not indefinitely paralyze the legitimate commercial operations. The ED's affidavit listed 9 safeguards, including full title disclosures, indemnity bonds, non-encumbrance certificates, and undertakings not to alienate the substituted assets. Now, the court accepted all of them, and importantly, it also held that if the alternate assets are later confirmed to be tainted under the PMLA, they will have to be handed over to the ED. Now, legal experts have hailed the verdict as a progressive balance interpretation of a PMLA, and this decision, they say, would shape the future of enforcement strategy, particularly in the capital-intensive sectors like real estate, where long delays can derail entire projects, impact jobs, and hurt investor confidence.
This edition of Market Fatafat, it's a goodbye from me and Ankita, but stay tuned because closing trades is up next.